Hi everyone. Today we are going to start the topic of transfer of business, transfer of a business as a going concern. So there are certain transactions, certain situations where a business is sold as a going concern. Uh, so we are going to look at how that is affected in that given scenario. VAT is normally charged on the supply of goods or the supply of services in the course of furtherance of business. However, if a business is transferred as a going concern, and this TOGC has been put in as an abbreviation, it is treated as not being a supply of goods or services and is therefore outside the scope of VAT, provided certain conditions are met. A transfer as a going concern is defined as the transfer of whole or an independent part of a business from a person to a taxable person for the purposes of continuing the business that was transferred. So so the key thing for us to focus upon is for the purposes of continuing the business that was transferred. So the intention is not to break down the business into, parts and which are later on sold as scrap or otherwise, auction. But it is sold, the business is sold as a going concern to the buyer who takes it on. Now, share sales versus asset sales. So let us talk about what's the difference between the two. A company can be bought and sold by transferring shares of that company. The company itself is not involved in in the transaction, and therefore the business still retains all its assets, liabilities, licenses, employees, relationship, everything is there. So it's only purchase of shares. So purchase of shares gives the ownership of the company, which ultimately, which later on uh, owns the all the assets, liabilities, etc. The new owner takes over the purchased company with all of its assets and liabilities, including any existing tax obligations of the company. That's a key point for us to remember. Once a company is sold, is transferred as a going concern, the tax liabilities of the company are also transferred and they are also assumed, seen to have been deemed to have been assumed by the buyer or the acquirer. On the other hand, a transfer of assets, including a transfer of goodwill or trading licenses, involve the transfer of the title in the assets from one person to another person. In this kind of asset sale transaction, there is no change in the ownership of the entities involved in the transaction. So no change happens. It's only an asset transfer. Okay. So company stays the same, owner stays the same, the asset is transferred. It is basically disposed of or sold. The purchaser does not take on liabilities that are not expressly part of the transaction or that are attached to the purchased assets. The purchaser does not assume those liabilities. A transfer of business as a going concern is a type of an asset sale, not a share sale for VAT purposes. So it is important to distinguish first between a share sale and a sale of assets, and then between a normal sale of assets and a sale of assets as part of a transfer of business as going concern. So for the VAT purposes, let me repeat what we've just read. The transfer of business as a going concern is not a share sale but an asset sale, or you could also say net asset sale. Okay. So naturally there is a difference. So company may stay the same, the entire net assets may be sold to a buyer. That's the difference between share sale and asset sale. Normally, a sale of assets by a taxable person is treated as a taxable supply, subject to VAT at the appropriate rate. In some limited situations, for example, the sale of bare land or residential property, the supply may be exempt for VAT purposes. So normally a sale of assets by a taxable person is treated as a taxable supply subject to VAT at the appropriate rate. But in some limited situations, for example, in the sale of the bare land or residential property, the supply may be exempt for VAT purposes. But why? Because these have been provided in the VAT decree law as types of exempt supplies. In contrast, where assets are sold as part of a transfer of a business as a going concern, the transfer is not a supply at all, and therefore no VAT is charged. Okay, so that's a very important angle. In one scenario, it's only assets that are being sold, right? But not the entire business, right? But in a in the topic at hand that we are looking at, where assets are sold as part of a transfer of a business as a going concern, this transfer is not even a supply, which why? Because basically it's the ownership is changing. The entire taxable person, part of a taxable person is being sold or transferred to the responsibility of another person. The transfer is not a supply at all, and therefore no VAT is charged. This treatment applies to a transfer of the business, irrespective of the VAT treatment, which would apply to any of the underlying assets that are being transferred. So once a transaction becomes out of scope, then all the elements or components, all the assets, liabilities, uh, they will all go out of scope. Example one. Explain whether the following asset transfers are transfers of a going concern. So the first thing is whether the following assets transfers are transfers of a going concern. A manufacturer selling its factory building on its own. Manufacturer which sells its factory building on its own. Explain whether the following asset transfers are transfers of a going concern. So we have to see carefully. We have to understand. We can't, immediately say that the entire business is sold because the factory building is sold. I mean, they could sell the building and rent it back. There could be different situations. A manufacturer selling its factory building, and as part of the contract, all the goods and services required for the operation of business are transferred, including the manufacturing equipment and employees and supply contracts. Now, this is a clear-cut scenario of transfer of business, because now together with the sale of the factory building, the entire operations are being transferred. So this is a transfer of business as a going concern. This will be out of scope. But this first situation scenario, manufacturer selling the factory building, this does not seem to be the transfer of business as a going concern. It will be within the scope of VAT law. TOGC conditions. The for a transfer, TOGC transfer of going concern. So, or you could say transfer of business as going concern. For a transfer not to be treated as a supply for VAT purposes, the following conditions must be met. There must be a transfer of the whole or an independent part of a business. There must be a transfer of the whole or independent part of a business. The transfer must be made to a taxable person, and the recipient intends to continue the business which was transferred. So these three conditions are: there must be a transfer of the whole or independent part of business. That's the first condition. Transfer must be made to a taxable person, and the recipient intends to continue the business which was transferred. If these conditions are met, the transfer in question will be seen as transfer of business as a going concern. Now, transfer of the whole or an independent part of a business, that's another topic to discuss. Whole or independent part. So let us look at it. Article 1 of the VAT decree law defines business as an activity conducted regularly on an ongoing basis, on an independent basis by any person in any location. This is a definition we've read 100 times for of what is business. It's a three criteria: regularly, ongoing, independent, and any person, any location, various types, commercial, agricultural, etc., etc. And one more point was tangible and intangible. It can be through intangible property or tangible property. Therefore, a mere transfer of assets will not qualify as a transfer of business as going concern. The transfer must give the recipient possession of the whole of a business or part of a business where that part is capable of separate operations, like a business segment. As part of the transfer, all the goods or services that are necessary for the continued operation of that business or a part of that or a part of a business must be supplied to the recipient. Basically, the part of that business which could be seen as a segment, which is a separate revenue generating segment that is sold. Depending on the facts, this may include, among other things, goodwill, licenses, premises, machinery and equipment, employees, ongoing contracts, and liabilities. Depending on the facts, these may include goodwill, licenses, premises, machinery and equipment, employees, ongoing contracts, and liabilities. To qualify as a going concern, the transferred business must be operational before and at the time of transfer. To qualify as a going concern, the transfer business must be operational before and after, before and at the time of transfer. So it has to be so basically retrospectively active business. Transfer of a taxable person, transfer to a taxable person. For a transfer of business as a going concern to take place, the recipient must be a taxable person at the time of transfer. That is, one should be registered or obligated to register for VAT. So that's a key condition. This condition will be met if any of the following is in effect on the date of transfer. This condition will be met if what are in effect. Let's read them. The recipient is already registered for VAT. The recipient is required to be registered and has applied for registration to the Federal Tax Authority. Uh, and the third one is the recipient voluntarily applied for VAT registration and the Federal Tax Authority has accepted the application. What are the three conditions? This condition will be met if any of the following is in effect on the date of transfer. Number one, the recipient is already registered for VAT. Okay, so that's an easy one. So that's already a registrant. The recipient is required to be registered for VAT and has applied for the registration to the FTA. So taxable person, second category, non-registrant, meaning he is required to register but has not applied yet. And then, or the recipient voluntarily applied for VAT registration and the FTA has accepted the application. So that is a scenario where the person has already registered, even if voluntarily. So that's about it. Intention to continue the business. The recipient must intend to continue the business which was transferred. This requirement will be met as long as the recipient of the business intends to carry on the same kind of business which it acquires. For example, the recipient acquires a property with a leasing business. The condition will be met if the recipient intends to continue leasing the property. So that's an easy one. If the recipient requires a property with a leasing business, uh, the condition will be met if the recipient intends to continue leasing the property. In contrast, the condition will not be met if the recipient has fundamentally changed or did not use the property after acquiring it. For example, it would not be the same kind of business if the recipient acquires the property leasing business but intends to use the purchased property as their own headquarters, consumption, like self-utilization. Although there is no requirement for the minimum period for which the transferred business must be operational under the recipient's ownership, the intention to continue the business must be genuine. A short period of temporary closure of the business immediately after the transfer is permissible if it is necessary to prepare the business for operation under the new ownership. So yeah, so some once this sale has occurred, a very small period of transfer can be admissible, can be accepted. Seller's VAT registration. Note that there is no requirement for the transfer to be registered for VAT for a transfer as a going concern to take place. There is no requirement for the transferor to be registered. Seller does not have to be a registered person or something. Where the transferor is registered under the mandatory VAT registration threshold, the transfer of going concern will not affect their registration requirements since it would not be a supply for VAT purposes. So uh, this transfer does not affect the VAT status of the seller. Seller's obligations. The public clarification on transfers as a going concern explains VAT P015 explains that the transfer of a business as a going concern does not relieve the seller from its tax obligations incurred during the ownership of the business and the underlying assets. So the seller, if there were any obligation, let's see there's an example. For example, if the seller mistakenly omitted to register for VAT and to charge VAT on its supplies during its ownership of the business, the seller would remain liable to the Federal Tax Authority in respect of these violations. So that's about it. This was the entire discussion on transfer of business as a going concern. Thank you very much.